Today we're talking about LIBOR and Prime. Sorry, it's not the latest Avengers characters. It's not even a band from the 70s, but LIBOR and Prime are very important interest rates. First off, thanks for the positive feedback. It's been super fun. We'll continue to address specific questions. So this is our third video in our series addressing the most common questions, concerns, and misconceptions around retiring in a low interest rate environment. I'll address Beth from Utah, who asked me, Telton, what does the Fed rate have to do with all the other rates? It might take us a couple videos, but we'll cover prime rate, LIBOR, credit cards, mortgages, CDs, car rates. We'll try to cover all of those rates. Last video, we addressed some reasons why I think it's pretty reasonable to anticipate that interest rates in the US will stay low for a long time. As mentioned in the intro video, we're seeing developed countries using negative interest rates. I can't emphasize enough, working with an advisor, obviously we'd love to help you here at Advanced Financial Planning, but either way, creating a plan to address this fundamental change in the economy could be a critical component of your retirement plans. And truly that's applicable whether you're a ways out or you're retiring really soon this year or the next couple years, or if you're already in retirement, it's still important to address. Up to this point, we've talked specifically about the Fed rate or the Fed funds rate. That's in the US. In other countries, we refer to them as central bank rates. The big question we'll start to address today and over the next few days is, what does the federal rate have to do with the rates that actually affect you? We'll get more and more specific on the major effects this will have on retirement income rates, and we'll cover some potential strategies to help you address those. Today, the other rates that people seem to hear about the most are prime rate, LIBOR, mortgage rates, CD rates, and then your savings rates like money market accounts or bank savings accounts, as well as credit card rates and car loans. Those seem to be the rates folks are most familiar with, so we'll touch on these. Let's start with LIBOR, L-I-B-O-R. Folks that have heard of it basically ask two questions. How is LIBOR different than the Fed rate, and how does it affect me? In general terms, you'll know if LIBOR affects you because there are certain variable rate loans that use LIBOR instead of the US prime rate as a benchmark to adjust rates. LIBOR stands for the London Interbank Offer Rate and is published daily, so it can change daily. And because it's a daily average, technically called a trimmed mean, not to be confused with a mean trim, but you can think of it as a daily average of how much major global banks would charge another bank for a loan. And so that makes it really the only rate that's used worldwide. One distinct way it's different than the US Fed rate is it's actually based on real loans being made versus the Fed is set by the Federal Open Market Committee to manage monetary policy. Okay, you made it through LIBOR. If it doesn't affect you, you're just that much smarter now. Congratulations. Now for prime. So the Federal Reserve Board or the Federal Open Market Committee, they meet 8 times a year or as necessary to adjust the Fed funds rate. Banks use this Fed rate as the amount of interest they charge other banks to make overnight loans to each other in order to maintain required reserves. Prime rate is the rate that commercial banks will offer to its most credit-worthy customers. So notice that the Fed rate is US bank-to-bank loans. LIBOR is global bank-to-bank loans. Prime is US banks to high credit customers. So prime rate really moves lockstep with the Fed rate, almost exactly 3% above the Fed funds rate. Currently, the Fed fund rate is 0 to 0.25, so prime is 3.25. LIBOR typically tracks the Fed rate as well, but in times of global economic concern, banks make that decision, so it can actually be quite a bit divergent. Wow, you're getting smart. Prime rate will typically have a direct impact on lines of credit, like business revolving lines of credit or home equity lines of credit. And yes, credit card rates typically fall into that revolving lines category. So revolving lines of credit loans are typically going to be prime plus some percentage point you fill in the difference based on your credit score. So those rates have come down, but because they're based on the Fed rate can't really go any lower. So that could be a potential place where those rates are at very low and could be a place where we could take advantage of that situation. In addition to that, we're going to cover those other rates that we talked about, such as CDs, mortgages, cars in the next couple of videos. We'll teach you all about it. You'll become a wizard. Or better yet, come meet with us. Let us deal with all of the details. Our clients tell us, Telton, I'm so glad that you and your team are smart. You take care of us and catch us up to speed whenever we do our ongoing reviews so we can walk you through that to help you make the most out of your retirement situation. We'd love to visit with you. Give us a call for a second opinion, whether you're in retirement and still have some assets just sitting around, or getting close to retirement, or still have a ways off. We'll talk to you soon. If this information has been helpful to you, check out our other Telton's Tips videos, or better yet, reach out to our office. You can call and talk to an advanced financial planning team member. Imagine that, a real live human. These wonderful folks can answer a quick question for you or schedule a complimentary initial retirement planning meeting. There is also a link provided if you would like to learn more about who we are at Advanced Financial Planning and what we do for our clients in planning their secure retirement income. Lastly, the schedule an appointment link will bring you up to our calendar, and you can choose a time for a complimentary on the phone or in-person retirement planning meeting. Whichever of those options you choose, the only mistake is to do nothing and die at your desk. So call, schedule, or learn more. Your future retired self is depending on you.